Hello everyone, this is Juan Sarmiento and today is Thursday, January the 21st. I have been considering potential trades. Unfortunately, they don't quite fit my requirements. One of them is Palo Alto Networks, and they are due to bring earnings in late February, so that wouldn't make too much sense. We want to enter the trades right after earnings. The other one is CMI, Cummins, I think. No, CMI, Cummins Incorporated. Been doing really well, but look, the earnings are coming up. So we don't want to trade those because earnings are going to have a volatility collapse. It's important that you know that I have gone through a few potential trades before I decided not to trade anything. However, once all these earnings begin to show up, there will be many candidates that we will want to trade. So don't despair. There will be trades in case you want to follow along. Okay, so what we're going to do then today is look at our current positions. I'm going to increase the light here and go through them and see what you need to do. So I'm going to arrange them. If you want to see how I show them all up, go to the watch list here and then say current account positions. That gives us our positions. Then you just click on the symbol to organize them alphabetically so they don't change. If you put something like the price, that could change, but not the symbol. Okay, so then we organize them alphabetically and we can go through all of them. When you click here, if you have this yellow icon here as well as in the chart, all you need to do is click here and the chart will show up. Click on anywhere in that line and the chart will show up. That's a quick way to say, are you bullish, are you bearish, are you neutral? Is the volatility high or low? This is the implied volatility, by the way. So you can see, oh, okay, we are at the lower end of this year's volatility range. That's important to know. You don't want to be going, if the volatility is spiking, that's perhaps the time to leave the trade, because once the volatility goes to a high level, it begins to decline, and whatever profits you had, you will begin to lose. Okay, let's go and take a look at the Analyze tab. And this shows us my current position. And we look at, obviously, I entered this last time. And you see the long-term options are June options. There's plenty of time for that. And the short ones are February. If you want to see how long before that, just click on the Add Simulated Trades and then go down. And it says 36 days to expiration. And we want to take advantage of around 30%. The volatility begins to decline, and theta, the value of the option due to theta, declines fast. The time value of the option declines fastest 1 month before expiration. So we want to take advantage of that to protect us in case the stock just goes sideways. Okay, let's move on then. Because we have February 36 ways to go, we don't need to change anything. That's my conclusion there. Let's go to CMCSI, or this is Comcast. Let's take a look at the chart just by clicking here on the chart. And it's bottoming out. It's in the Ichimoku cloud, and this is where there is support. The stochastics is about to give us a spike up, but the earnings are coming up. Remember, when your earnings are very close, this is only a week away, which means that by the time we see each other again, earnings will be upon us. So we need to make a decision whether we want to close this trade or not. Let's go to the Analyze tab. And I have been making adjustments so that it's now very regular. Let's look at the risk profile. And it says, okay, it's negative, delta negative. And take a look at the chart. We say it's bottoming out. So we want to neutralize the trade a little bit. So how do we do that? Well, it seemed like at some point the stock was going up and we didn't quite sell as many puts. We could sell now enough puts to neutralize the trade, the same as what we have here. So remember, we want for this to be neutral, you need to have an equal number of long options, calls versus puts, and have as many short term. Okay, so 10, that would be 10, 10, 20, 20. We have the proportion, the difference between calls long and short is 8, but for the puts, the difference is 16. So there's plenty of room there for us to sell puts if we want to do that. We can do that. Wait a minute, I can just sell. Let me do it this way. Analyze closing and then revert it. We can sell as many as 6 puts and the same expiration, and now this becomes very bullish. 151 deltas. That's equivalent to 150 shares. Okay, I say, well, that seems like a little too much. Let's look at the chart. Does it look like he's gonna go that bullish? Probably. Could be, because it's finding support here on the Ichimoku cloud. Perhaps it goes sideways and then continues lower, but who is to know? So right now we could sell not 6 but perhaps 3, something to neutralize our deltas, which are right now negative. We don't want them negative. 50 sounds about right. It's probably what I want. Okay, so 84 cents. Oh, okay. We could do that. That's one option. The other suggestion that I have is to simply close the trade. So select the 4 legs. We can open and close 4 legs at a time as a single trade. Okay, so let's say analyze closing and say double diagonal. Okay, that sounds good, but that's 4, 4, 4, 4, as you can see. Okay, so you need to customize and then close the position. The longs, we have 18 calls, 20 puts on the long side that we want to sell, and 4 puts and 10 calls on the short side that we want to buy back, and that gives us a credit of $1865 times 100 is $1,865 to close this trade. And again, because earnings are so close, I don't have any big guesses as to whether this stock is going to go strongly higher or strongly lower. We are right now in a very sideways short-term bottom here, but I don't know how persistent that's going to be. The stock could go back and retest the highs or even break above to new highs, but I wouldn't be surprised, that this is not telling me anything. We would have to wait until earnings, really. After earnings is where the stock is going to move strongly in either direction. For now, it's just going to go sideways. That would be my guess. So what I want to do is to simply get out of here. If it moves strongly higher, we can always re-enter the position. But right now, it looks like it's time to go because the volatility will decline after earnings. So let's do that. Confirm and send. And wait until that gets filled. If not, I will adjust. Let's go to DHR. Okay, so here we have February 19. How long before those expire? 29 days. Okay, and I just told you 30 days is the ideal. And here again, we have earnings coming up on the 28th as well before the market. So I want to close this one too, simply because earnings, and I don't have any strong feelings in this case. But it looks like it has done a double top here. So breaking below the previous low is a possibility. But I've also seen that after a breakout, after an attempt, what looks like a double top may end up breaking, making a U-turn and go higher. So right now, earnings is going to determine where the stock is going to go. Right now, I just want to get out of this trade. And if the stock goes up significantly after earnings, great, that would be great too. Then we can consider re-entering if it fits our requirements. Okay, so 4, 4, 2, and 2, that closes my trade. The risk graph should look flat. And then there we go, we close this. Confirm and send. Now, these are all mechanical moves, meaning I'm doing it because my rules tell me so. I don't have strong feelings about any of it. So I'm just going to close them, close the positions. Let's move on to Disney. Okay, so in the case of Disney, great. This is last week I had done the rollover of the call side, and now is the put side. You can tell that the puts, depending on where the market opens tomorrow, those puts, because it's Friday, tomorrow the 22nd, it may expire worthless. And then if you happen to find yourself on Friday expiration and you have something like this where the short puts are about to expire and it doesn't look like it's going to go below 170 early in the morning, you can sell additional puts and leave those short puts alone. Okay, it could be closer to closing. You don't touch anything and then you simply sell the February puts at that time. Not today, because for all we know, some bad news can come after hours and the stock opens at a different price, and then at a much different price, and then we wouldn't want to be caught with in a bad situation. So let's just do this. Do the rollover is the best thing you can do. And doing that, look, it makes my trade a little more positive. You can always sell calls at 170. Let's take a look at the chart. Yeah, we can do the sell and neutralize the trade by selling one more call. Okay, so let's go to add simulated trades and look for, you see I have 6 calls long and 6 calls short. So that was the Comcast trade was filled. Okay, so I could sell one of these calls in addition to do the rollover put area. Okay, so let's go the put combination. Let's go to March, find our calls here, and just sell one more to add it to this trade. For that, you press the control key and just click on the bid. There. And then we get a big credit for that. And yeah, that's still, I don't like it. It's too, no, I don't want to do that because it's too bearish still if I do that. So we don't want to do it after all. But so again, let's do the put side first, analyze rolling. And that becomes too positive. Let's go to, needs to be to February here. Yeah. Okay, let's do that. It's 33. I'd rather be 33 delta positive than 33 delta negative. Why? Well, because if the stock continues down, volatility would continue higher and that would pay off even though our deltas are positive. Okay, so let's do it this way. We're not going to alter the long calls. We may do that later. Confirm and send. Okay, now suppose that happens. Suppose we get filled this 2 calls. Analyze that trade. bring it back here. Suppose this put rollover gets filled. We could sell one of those calls and buy at a higher strike price. Analyze rolling. That's another way to neutralize my deltas a little more by selling one of my March puts, calls that is, and buy at another one, same expiration, at a higher strike price like 75, also March 19. Okay, and then you get a credit, and then my deltas go from 33 to 24, and that's more neutral to me. Okay, that looks great. Okay, let's take, that's a way to take profits too. Confirm and send, and neutralize my position. Even if we didn't do this rollover, it would be good. It would neutralize my thing a little more. Okay, so we will come back to these and recheck if we need to adjust our prices here. Let's go to DLTR, analyze that. January 29th, that's next week. Okay, so in this case, we can roll over and or close. Let's look at the chart. Yeah, I want to do a rollover on this one. If you take a look at the ad simulated trade, 29 is 8 days from now, and this is why I do this on Thursday. But you could do them on Friday, and 7 days to expiration is what is a good time to do the rollover. So let's analyze rolling and go to February 26, let's say. And that gives me $4 credit. Take a look at the chart. Before I do that, 62 is my delta. That's pretty high. When I do the rollover, it becomes less high, is lower. 22, that's about right. That's about what I want. Just a little delta positive. Okay, if the stock continues on higher, that's fine. If it collapses, we'll be all right too. Let's go to Facebook. Take a look at the chart. I think earnings are coming up. Oh yeah, look at that. We benefited from this collapse in the stock, but now it's going higher. And now you see we have five legs to this. So we can only trade 2 at a time. And I'm tempted to leave it alone. But earnings are coming up on the 27th. Okay, so we got 2 more trades filled, and the Disney is still pending. Okay. Okay, that's my calendar on Disney. And yeah, that will get filled for sure. So let's leave it alone. Okay, let's go back to where we were. Facebook, what do I do about Facebook? Give me a second here. Okay. I think I'm going to leave it alone for no other reason that this Facebook is only $1,230 worth. $1,230 worth. But this will appreciate dramatically if the stock goes up to 295 again, wouldn't it? If it goes down, I wouldn't lose that much. Obviously, volatility could pick up, and yeah, I see that earnings would make a huge difference. I'm risking only $1,000 to see it over the earnings, $1,200 to see it over earnings. So I can just ignore this. But you can see there's not much value left on that trade anyway. So these 295 were way up, out of the money for the calls. The puts are deep in the money, and I have a long put at 245 way out here, down here, so I think we're fine. We're not going to lose much money. But if the stock jumps, it's more like a lottery ticket. If its stock jumps after earning and does reach 295, we will make good money. Let's go to Logitech. Okay, so Logitech, let me look at the chart. Going for new highs, they reported earnings. See what happens when you report earnings? Weird things could happen. The stock went down first and then up, and the volatility collapsed. So that's not favorable for our trade. Just the same, let's look at how well have we done for the year. We have lost $540. I don't know, I think we had those long before. Okay, so we would have to go back several months. Okay, it says here 100 days back from today. And we got that last trade on Disney Field. That looks good. Let's go back to Disney for a second here. So we take a look at what it looks like. 25 deltas, that looks great. I'm going to leave it alone. To have a better visualization, deselect the January 22 that we just sold. And this is what the trade really looks like. Okay, it's pretty neutral here, right? Pretty neutral. Okay, let's move on back to Logi. I think that's where I was. Okay, that's set to 100 days, so P&L difference is back 100 days. Let's see if I put, let's say 200. Would that be any different? No. We are losing $545 on that trade. But now it's breaking out to a new high, and we are delta positive, 35. So that's good. Eventually, what we can do, you see, we have 5 calls of the 90 calls, and we can roll that up as well, just because we have 4 short calls and 5 long calls. The difference is 1. So we have one excess of 1 of these March 90 calls, and we can roll that up to 105. How about that? Say analyze rolling, and just say 1. And we are buying the 105 current price call expiring the same day, March, and that gives me $10.45 times 100 is $1,045 that I can use for other reasons. If I do that, my deltas will become negative. That's not such a hot idea when the stock seems to be breaking up to a new high. But we can certainly look at that again next week. So I'm going to leave that alone. The expiration is February, so no problem there. There's plenty of time before that. Microsoft. All right. Here I have set up for a rollover. Let's take a look at the chart first. Oh, it's breaking out of my triangle here. As you can see, the triangle is slightly different here, but that's a breakout, definite breakout, and which means that the stock is very likely to go to a new high. Okay, so I want to stay on it. But earnings are coming up on the 26th. So that's a risk you take when you do that. Is delta. You see the shorts are 35 deltas, the longs are 29 deltas. That's sort of favorable. And if we do the rollover to February from this buyback this January 29 and sell the February's, that gives me a $5.44 credit times 100. 544 times 2 is over $1,000. And doing that keeps my delta at 60, and right now it's 15. Again, earnings are coming up on the 26th. You can decide to do this. Oh, let's not do the rollover at all. How about that? Because these calls are due to expire and puts are due to expire 3 days after earnings. That sounds good, actually, because the short calls and puts would collapse after earnings a little more than your long ones. If the stock spikes from here, we're still are delta positive. If it collapses and lands here at 214, then we have this delta consumption, the theta decline, the theta erosion, the delta erosion, the time erosion of those options will make sure that we make additional profits. So I'm going to leave it alone. I know this is different from what I have done routinely. If you have any doubts, in case of doubt, do the rollover or exit. But I'm going to show you what happens when earnings happen and we are in sort of near or at the smiley face. We might want to stay there because a strong move in either direction becomes favorable. If you are right at the option strike price, then it's not a good idea because volatility will collapse then, affecting your entire trade. But in this case, oh yeah, let's try it. What if it goes to 240? We make additional money. Okay, let's move on to Qualcomm, February 5th. Okay. And here's where we are. Our deltas are 45. Let's take a look at the chart. I'd say it looks toppy right here. Earnings are coming up. We want to neutralize our deltas because of earnings. We are way over the smiley face. And then here again, because of that, think of it as a possibility of a strong move in either direction on earnings. Oh, how about if I did this rollover? Because I have 3 calls long, 2 calls short at 145. So I can roll one of them up to 165. I already have one of them here. And that way I get $1,285. And then my new trade will be more delta neutral so that I don't care if it goes in either direction upon earnings. Okay, and look at what we're selling. The 45 that we're selling has a volatility of almost 42%, which means it's more expensive than the 38 that I'm buying. Great. Confirm and send. We're getting good premium for our money. Starbucks, are they reported earnings? Yes. See all the things reported earnings now? Again, we are closer to that end here, so we can sell one call. We are close to the end over here. We want to neutralize. Our deltas are 91. We can sell the front month call, have one front month call, analyze closing. Just sell one and see if we are going to get more of a delta neutral as 15 deltas. That's more neutral. That sounds good to me. So just by selling one, that's what happens. You can always sell the March. Is probably going to get more premium out of that. Let's duplicate that and change the date to March. And we're going to get $7.50 for that. Okay, and my delta is 23 by doing that. By selling the front month, my delta is 14. So I want to do the back month because your deltas are more, 23. Yes. Okay, slightly more. I want something between 0 and 50, preferably between 10 and 50 deltas. Okay, let's do that. Confirm and send and get a little money out of that. And that's more delta neutral. In case of doubt, always trying to neutralize your deltas. And then target. I don't want to do anything on this position. You can see that the deltas, deltas are 17, very close to neutrality. We're in the middle there, but the shorts expired way back in February. Okay, so there's plenty of time before that. And that's about it. Let's make sure we got all our trays filled. We still have that Qualcomm to get. I'm going to give it some time. You can see the mark is above the credit, so that is very possible that it will get filled. Otherwise, cancel replace, and you can change the price a little bit. Let's say go down by 5 cents and filled. There we go. End of story. Okay, so far this year we are here $3,000 below. Okay, so we had an excellent year last year, so things are going to balance out just a bit. Keep in mind that this form of trading is not about what you get every day. It's about what you get in the long run. And sometimes it takes a long time for you to get a whole lot of money in your pocket, but you don't have to think much about it. The idea here is you analyze every trade, you make the changes you need to make, and always give yourself room for new trades by selling stuff, by rolling over, by rolling up, and rolling down depending on whatever the case may be, so you get more money. Okay? That's the way to do it. So thank you for joining me, and I'll see you next time. Bye-bye.
Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much.